Japanese yen carry trade, which is right up to that first level of 140.34 area. I think it's going to go a little bit higher. In the same way, I'm still waiting to see what happens. By the way, that's a really beautiful fib level for a pause. It does not mean it's done. It just means it's typically where we get an overshoot and then it comes back down. So when that happens, it'll be a nice yen long trade. In the meantime, in the in-between time, yen keeps falling with bonds. Obviously, we are right back to where we were yesterday with that big gap down. We'll see if we get any reversal this during regular trading hours, way through my 142 price target. And the next one is 151, just because I need a level. Bank of Japan said they're not going to let it go above 145. So here's the 145. We'll see how they do. Dollar yen made not once, but twice that 145 tap. I mean, they really don't want it above here, do they? Bank of Japan. 144.99, 144.96. It's close. All right, so a while back, a few weeks ago, I should say, I posted in Macro to Micro a thread by Michael Cow under Urban Cowboy, kind of a play from Twitter, on the oil forward curves and the holy grails. I shared that because it was very much in keeping with my thoughts that we were looking at a, kind of a Eurasian currency contango crisis coming up 2.0. And that was basically that the dollar yuan would get above the 6.9899, that I set out here in April, that the dollar yen would get above 145. Now, even though my price target was 142, you all know that, for a long time, I thought maybe it'd come back down and then go higher into this 151. I'm reading now that they're looking at 150, right? In other words, a lot of folks are not expecting this to hold. They just posted a massive trade deficit, like a 330% move. Why? Because they have to import LNG. They're completely dependent, right? Energy-wise, they don't have their nuke plants since Fukushima in full swing, so that's going to take a while to get back online. Long story short, they're the largest importers of LNG globally. Trade deficit was whacked. Their continued attempt to, yield curve control is going to be met with, I think, an energy shock. But the way that he put it in his thread, which I shared in Macro to Micro, was basically an exogenous downward demand shock is hitting an inelastic supply curve. So inelastic supply curve, meaning shipping. We can't bring everything to the U.S. shores in a New York minute, right? It's a massive undertaking, and we outsourced everything to China, their ports and their ships. Remember the Evergrande, right? And even their containers. Like, we're dependent on so much, it's ridiculous. So now in the U.S., we have this strike that's looming. If they don't come to a negotiation Thursday night, although negotiators still say it'll be resolved by the weekend, we get 112,000 railroad employees looking at, demanding a 24% pay raise and sick leave and other benefits. So labor is kind of inelastic. Oil demand supply is right now inelastic with lack of refining capabilities. Supply chains are still trouble. And basically, I just don't see how this is going to last, and others are starting to see the same thing. We've got some currency wars, I think, that are going to hit soon, and that is already being played out in the deval of the yuan, right? It's definitely putting pressure for sure on the yen, and I think we're going to see this percolate higher above their line in the sand, their most recent line in the sand of 1.45. So I just think we're going to have some continued currency war drama, for lack of a better word. All right, so it was on fresh 24-year lows. The euro is on 20-year lows. The dollar is at 20-year highs. And currency intervention is absolutely going to have to take place. And that's going to make this game so much harder. The need for currency intervention, the euro, the yen, the yuan bounce strongly. occurred when Japan intervened, okay? And that was definitely at that 145 mark, right? You can kind of see this very, very obviously, especially, I might add, here's my price target was 142. We overshot, we came back in, we overshot, we came back in, then we really, you can see this red bar. So I'm going to be watching this 140.34 very strongly. It's a very important level. If you're on a monthly, this is very important as well. So if we break back below 139.39, then we have a pullback. It's gonna happen. And that's more questioning whether we've got a short covering in this very devalued yen, right? Which could happen. We could absolutely have a very strong move higher in the yen just because of short covering. But I'm still watching this 145 level because above that is just a parabolic event, in my opinion. So we come back down, you know, yen's moving higher. We get supported up here. Sorry, where am I? Here we go. We get supported up here about this 140. That area holds, and we scoop higher back above this big quarterly trend line. That was my 142. Which is really now 145 because the Bank of Japan said so on the 7th. They literally came out and said, no go above 145. So this is what happened overnight. Boom, dumped. And the yen moved higher. So as I mentioned, yen, gold, and bonds typically move in the same trend together. Doesn't mean it's going to be a perfectly timed thing, but definitely keep eyes on the prize here. The dollar yen is actually starting to intonate a stronger push above 145, which is the Bank of Japan line in the sand. So that's important. These are all in play. The escalation that has been coming in the currency markets and helping obviously to drive the dollar higher. Dollar yen, all eyes on Bank of Japan line in sand, 145. They said it shall not be allowed to go any higher. So you know what happens when it does? There'll be panic. So the big currency to watch for sure is the dollar yen. So once again, it got up to that 145, right? Actually hit a little high here, 145.31. And then Bank of Japan comes in and like whack-a-mole tries to keep it down. I just don't think it's going to last. So I think that's basically it in a nutshell. We still have a lot of risk here in currency. All right, let's take a look. Dollar yen, still above 145 is a big deal. Big deal. We are still, just so you know, not only above a yearly level, above a quarterly level, but we're above the BOJ line in the sand, 145. So all I'm looking for next is a trigger above this trend line to head up to 151, 152. Price action is very strong. So the deval is very strong in the yen and the yuan. Yeah, and on the yen, this push higher. And again, Bank of Japan came out and said they're going to stay accommodative despite their line in the sand being broken. The Bank of Japan owns about half of the Japanese government bond market. Their yield curve control is at 0.25. They have an infinite balance sheet. And let's see, yesterday it was 3 days straight of no bond buying. Today makes the 4th. But more importantly, you know, I'm very, very risk-off minded as long as this puppy is moving higher. And the next price target, quote unquote, price target is this 151. Craig mentions potential catalyst to watch is tonight Japan CPI, which comes in at 7:30. Ah, yes. So their inflation has been hot fire flames. I mean, absolutely. And the fact that they announced last night emergency bond buying very well on the heels, very much could be on the heels of this CPI print. So market's looking for 2.9% and 1.8% core on Japan CPI tonight. That comes out about 7:30. A hot print there is likely to lead to more turmoil and potential for more aggressive bond buying. And that could lead to more U.S. Treasury selling and dollar rallying and risk off. Yes. We've got the bond buying emergency program from Bank of Japan, which is absolutely helping the risk on sentiment today, but they've got CPI, as Craig warned, announced at about 7:30 Eastern Standard Time, and that could reverse the whole shebang. So that is very bullish intraday. But big picture, it is still massively higher in trend. Transfixed on dollar yen, right? Here we are. I'm so transfixed on a higher dollar above 115, which is going to be, yeah, I don't see this as being sustainable. Level that I'm looking at on the dollar yen, which is obviously hit already, that 151. I don't see any pause yet, but that's normally where we get a pause. We get up to a fib level and then kind of relax. Otherwise, we're heading higher. We can come all the way back down to 145 and then get really supported and take off. That's another baseline. So I guess let me put it this way. We get above this 151, we have an increased rate of change potential. It goes parabolic. Or we pause here. We could even pull all the way back to 145, but that is very, very strong support. It's really not a high probability short until it comes all the way back down here and breaks this. All right, so we just had a big old risk off move here in the dollar yen. Big intervention, boom. In other words, this intervention right here, I think it's just perfectly timed with my, 151. I was just talking about this, right? And so boom, the timing is amazing. Okay, so this is typically where pauses happen, and you can see it. Look at this. Oh my God, too funny. It's too bloody funny. But. This is very bullish. I still think this is just a matter of time before this pops higher. I don't think it's going to work. In other words, I really don't. That's incredible. Literally was just talking about that. All right, so unless it's a whole bunch of yen intervention exactly at a fib level, I literally was just talking about that. Hysterical. Exactly at a fib level, exactly at a Bollinger Band, it's exploded higher and then it got tapped back in exactly when the yen came in. They did a yen intervention. There we go. Yen is trying to pop up. So the yen is popping up like a daisy because of that intervention. Not that I trust it, but it is what it is. Holy smokes, they're really smoking the yen right now. Unstable still, but you can clearly see the intervention. Look at that, real time. Unbelievable. We were just talking about it. So doesn't mean it's not going to stabilize and move higher. Okay, so just kind of pace yourself on this. It is a massive intraday intervention. Amazing timing. So now let's see how much they can actually accomplish. It's going to be bearish engulfing for darn sure. It's going to come down here. If you're doing this live, careful. It's going to come down to 148.86. So it's going to engulf that candle easily and that candle. Look at that pierce, perfect. I mean, unbelievable timing. We were just bloody talking about this. Major moves are gonna start to either very bullish FXY. I'm shocked that TLT hasn't gotten a little bit of bid here, and a little bit of gold. Maybe bonds, a little bit, itty bitty. But this is the one, right? FXY. Look at that take off. So we were literally just talking about that. Is it a reshort? Absolutely. But first, let it do its thing. My God, are they going to try and bring this up? Where am I? Literally, we just did that live. This is usually where they have a pause. So we got to get above that again. Just looking at gold. Short term, it's bullish. But maybe 157, like, it has so much work to do. It's not even funny. Short term, it's bullish.
don't like the odds of trading long bonds when they're also at risk of falling apart. But TLT 94 is a fib level. In the same way, they are really trying. I'm quite sure 148.86 is going to get tagged. So this is what we needed. Remember I said yesterday, brace for impact unless the bulls defend here. This is the market's best chance of having a sideways to higher move, higher, gentle move higher. That's not what I mean. A little bit move higher. I'm still bearish. So my point is that the stay of execution has appeared exactly when I opened up my trading room this morning with that the Fed whisperer talk of, you know, slowing the pace come December, which I've already said, right? November, we're having a 75 basis point hike, period, end of point. December is when they start to talk about the pause. It's not going to be good for risk assets before, during, or after. But so far, that's what I've read in my price behavior of my intermarket. Okay. That's number one. They're not done. Rates are not done going up. They're still going up. In fact, they're going up at a faster clip, which means at some point the Qs will go down at a faster clip. So they've been falling, right, slowly, and they're going to pick up speed, just like the dollar will pick up speed, but it hasn't pierced higher. And the reason is because of this intervention. Plain as day, right here. We just went from resistance level 3 overshot right down to support level 3 at exactly 148.96. Little off. Now we're having that reflexive bounce higher. But the point is, we tagged just exactly when I said this is usually where we get a pause. That's called a pause. That's called an intervention. And I don't think it's going to last, but they're trying. Now, if they push this intervention stronger, you know, we go a little bit more, like I just said, down to 145. Heck, we come all the way down to 142. We can come all the way to 140. This thing is still incredibly bullish. The trend is still in play. It just means a pullback. And that pullback could help the market move higher. They needed to come in. I was convinced yesterday, brace for impact unless bulls defend here. That's right here. That's what's helping the market stabilize. So we've got to see if we have follow through. The risk is still very obvious if they don't.